Welcome back to the Dollar Donkey's Value Investing channel. This time around, we'll be digging into a controversial topic, the real value of investing in unpopular sectors. Let's get to it. In the world of investing, the most well-trodden paths are often the most crowded. Investors typically flock to popular sectors that are in the spotlight, whether it's technology, healthcare, or consumer goods. These sectors often dominate headlines, attract the most attention, and experience high valuations, driving market sentiment. However, there's a different kind of opportunity waiting for those willing to look beyond the mainstream, investing in unpopular, underappreciated sectors. The real value of investing in unpopular sectors lies in the potential for outsized returns, diversification, and reduced competition. In many cases, the market has overlooked or undervalued these sectors, making them ripe for exploration by savvy investors. In this video, we will explore why investing in unpopular sectors can be highly rewarding, and how investors can identify, evaluate, and profit from these overlooked areas. Why invest in unpopular sectors? Investing in unpopular sectors can offer several key advantages, especially when viewed through the lens of value investing. Going forward, we'll discuss some of the reasons why these sectors often present untapped opportunities. 1. Undervalued assets. The most significant appeal of investing in unpopular sectors is the possibility of finding undervalued assets. Popular sectors attract the majority of investor attention, driving prices up and sometimes inflating valuations. On the other hand, sectors that are out of favor often suffer from neglect, causing asset prices to remain lower than their true intrinsic value. For value investors, these sectors present an opportunity to buy companies or assets at a discount, with the expectation that market sentiment will eventually shift. When the broader market realizes the potential of an undervalued sector, prices can rise significantly, generating substantial returns for early investors. 2. Reduced competition. The less popular a sector, the fewer investors are likely to focus on it. This reduces competition, giving investors a chance to take advantage of inefficiencies in the market. While this can sometimes be a double-edged sword, as unpopular sectors may also face additional risks, it also creates the potential for those who are willing to do their research and dive deep into these sectors to identify hidden gems. When there are fewer investors scrutinizing a sector, it's easier for an investor to find opportunities that others may have overlooked. This lack of competition in research and capital can provide an edge in identifying undervalued companies or assets before they gain broader recognition. Less volatility. Popular sectors often experience high volatility due to the increased attention they attract. In contrast, unpopular sectors tend to be less volatile because they don't face the same swings in investor sentiment. This can provide a stabilizing effect for an investor's portfolio, particularly when market conditions are unpredictable. By diversifying into unpopular sectors, investors can reduce the overall volatility of their portfolio. In many cases, these sectors may even provide a safe haven during periods of uncertainty when mainstream sectors experience a downturn. Innovation and long-term growth potential. Unpopular sectors often operate under the radar of most investors and media, which means the full potential of these sectors is not immediately apparent. Many industries that are currently unpopular may hold the key to long-term growth. By identifying these sectors early, investors can position themselves to benefit from innovation, new technologies, and changes in consumer behavior as these sectors evolve. For example, while the tech sector has received massive attention over the past decade, there are other sectors such as clean energy, space exploration, or blockchain technology that are still in their infancy. Investors who take a long-term view and invest in these emerging areas early on may reap the benefits of exponential growth as the sectors mature. Examples of unpopular sectors with real potential. Several sectors currently fall into the category of unpopular or underappreciated, yet they offer considerable potential for those willing to take a contrarian approach. Here are a few examples of these sectors. The clean energy sector is still somewhat underappreciated compared to traditional energy industries like oil and gas. While clean energy has gained momentum in recent years due to environmental concerns and government incentives, it remains a niche sector with lower levels of investment. However, as the global push for sustainability grows and as governments implement stricter regulations on carbon emissions, clean energy companies are poised for substantial growth. Companies focused on solar, wind, and energy storage technologies may still be undervalued, making this sector a great opportunity for investors with a long-term perspective. While the energy market overall has faced volatility, the clean energy market is expected to grow significantly over the next several decades, making it a potential high-reward sector for value investors. Space exploration is another sector that remains relatively unpopular in the investment world, despite the vast potential for growth and innovation. Companies like SpaceX, Blue Origin, and others are leading the charge in this exciting frontier. Although some companies in the space sector have gained attention through private investment, the broader public markets have yet to fully embrace the opportunities that space exploration presents. The commercialization of space could revolutionize many industries, from satellite communications to asteroid mining and even tourism. As space technology advances and becomes more affordable, the sector could see explosive growth in the coming decades. Investing in companies within the space sector now could yield tremendous returns as the industry matures. Agriculture and farming tech. While technology companies are all the rage, there is a strong argument to be made for the agricultural sector. The global population is growing rapidly, and as a result, the demand for food is expected to increase dramatically over the next several decades. Agricultural tech, which involves innovation in farming techniques, machinery, and sustainability practices, is still a relatively underappreciated sector. Investing in agri-tech companies, which provide solutions for improving crop yields, reducing waste, and creating more sustainable farming methods, could be a key to long-term wealth. The sector may not be as glamorous as technology or healthcare, but it has immense growth potential as it adapts to the challenges of feeding a growing world population. Health and wellness beyond pharma. Healthcare is one of the most popular sectors for investment, but there's a lesser-known subsector that could offer real value: health and wellness. Companies that focus on fitness, nutrition, mental well-being, and preventive health solutions are gaining ground, but are still relatively unpopular compared to traditional pharmaceutical investments. The global shift towards wellness and preventative healthcare is accelerating, as people are becoming more proactive about their health. As this trend continues, health and wellness companies are likely to see substantial growth. This includes everything from wellness apps and supplements to organic food brands and mental health services. How to evaluate and invest in unpopular sectors. Investing in unpopular sectors requires a strategic approach. Unlike mainstream sectors that are well-researched and heavily covered by analysts, unpopular sectors require more diligent research and careful evaluation. Here's how investors can navigate the process. 1. Do thorough research. Unpopular sectors often lack the coverage and media attention that mainstream sectors receive, so investors need to dig deeper into potential opportunities. Reading niche industry reports, attending conferences, and staying updated on emerging technologies can provide valuable insights into the growth prospects of unpopular sectors. 2. Understand the risks. Investing in unpopular sectors carries risks, including market illiquidity, regulatory uncertainty, and lack of historical performance data. It's essential to understand the unique risks associated with each sector and adjust your investment strategy accordingly. 3. Look for disruptive technologies. Unpopular sectors often contain disruptive technologies that have the potential to reshape entire industries. Investing in these technologies early on, before they gain widespread attention, can lead to significant profits. Look for innovation in areas like artificial intelligence, blockchain, biotechnology, and sustainable energy. 4. Maintain a long-term perspective. Unpopular sectors typically take longer to realize their full potential, and investors may have to endure periods of stagnation or underperformance. Having a long-term investment horizon and a clear strategy will help investors stay committed to these sectors and take advantage of opportunities when they arise. Conclusion. Investing in unpopular sectors can be an excellent way to uncover hidden opportunities and generate outsized returns. These sectors often offer undervalued assets, reduced competition, and the chance to capitalize on long-term growth trends. While these sectors carry their own set of risks, they also offer the potential for significant rewards for those who are willing to do their homework and think outside the box. By diversifying a portfolio with assets from less popular sectors, investors can reduce their risk exposure, gain exposure to emerging industries, and position themselves to profit from innovation and long-term growth. Whether it's clean energy, space exploration, agriculture, or health and wellness, the real value of investing in unpopular sectors lies in their potential to transform the future. So, the next time you're looking for investment opportunities, consider stepping outside the mainstream and exploring the underappreciated corners of the market. Thanks for watching the latest installment from our channel. If you found this video informative, please be sure to hit the like and subscribe buttons. Until next time.